Hi all. A couple of days ago we got surprising news from Rosenblatt Securities analyst with the surprising name of Hans Mosesmann, who confirmed his buy rating on Broadcom, but what was surprising is his target price. And we have a new record breaker because his target price for Broadcom is $240 per share, well, after split, of course. His previous target price, by the way, was $164, so it's quite a raise. And in his customer note, he relates that this raise is due to the company recently raising its guidance for their revenue for 2024, which will be about $51 billion, and its successful integration of VMware into the company. Now, I think there is one more reason why he thinks the stock is going to go up, and the reason is stock splitters are usually outperforming the general market in 12 months after the stock being split. In the research from Bank of America, they looked at the stocks from 1980 and they found that the companies who split their stock usually see their stock price rise by about 25.4% in the next 12 months, where the general market rose about 11.9%. Even if we take a look at the last 15 years and not go 50 years before that, in the last 15 years, the companies who split their stock are usually rising by about 18.3%, where the general market is rising 13.3%. And if you think about it, it's not because of some voodoo or some conspiracy theory. Usually the companies who are splitting their stock is the companies who see their stock really expensive. And why is it expensive? Because, well, the company's stock price is appreciated because the company is successful. And Broadcom is one of such examples. They have split their stock on July 15th, and we are expecting to see their stock price rise in the next 12 months. If you find this information valuable, press a like button and subscribe to our channel. We will be having more videos like that. In general, it seems that Broadcom has positioned itself perfectly for the upcoming AI revolution and all of the money that is pouring right now into AI and data center. According to JP Morgan Chase research, the company holds about 90% of market share for all the networking chips, which it is selling to Cisco and Arista networks. Broadcom is also the leading provider of so-called ASICs. ASICs is application-specific integrated circuits. That is basically a silicon which was made for a specific purpose. And one of these purposes, for example, in Broadcom's sense, can be made for example, AI. And we will see actually the performance of these ASICs in the financial section. We will talk about them later in this video. Now, one more additional driver of revenue for Broadcom in the upcoming years may be its acquisition of VMware. For those of you who don't know what VMware is, VMware are all about virtualization. I worked in virtualization for a couple of years, and basically what it means is that you have a bunch of hardware, you have a bunch of processor, graphic cards, networking, everything, and you need some kind of a way to pull all these resources together and, well, divide them into different servers, different kind of virtual servers. Basically, this is how all the big corporations in the world work right now. You almost don't have physical servers which are being worked by one person. Now, I know what you all think. You're all thinking probably, well, isn't everyone using AWS or Azure or some fancy new modern public cloud? Well, not really, because most of the corporations in America, more than 56%, are still using so-called on-prem environments. Basically, it means that they are buying their own hardware and using something, for example, Citrix or VMware in this case, to build virtual environments around them. And when Broadcom is saying their revenue is going to be more than they have expected because, well, the VMware integration into Broadcom is going better than expected, that's not really surprising news if you know anything about Broadcom. Broadcom is basically like a Berkshire Hathaway of technological companies. Their mode of operation is, let's go buy a company, and usually it's not very growing company but very profitable company in some specific sector. Let's integrate this company into our main business and let's sell the parts of this company which we don't need to other companies. By the way, this is how Broadcom got his name. Have you ever wondered why Broadcom is called, well, Broadcom, but their ticker is AVGO? That's because there was a company which was called AVGO, which bought Broadcom for $37 billion, I think, in 2015. They kept the name Broadcom and they kept the old ticker AVGO. And if you look at the history of how this Broadcom company is operating for the last 15 years, well, in 2013, they have bought LSI Corporation for $6.6 billion, sold its networking part to Intel for $650 million 2 years later. Then they bought Broadcom, as we said, for $37 billion and sold its portion of IoT products to Cypress Microconductors in 2016. Then they tried to acquire Qualcomm for insane sum of almost $130 billion, but all this deal got rejected because of, well, antitrust, monopolies, and you cannot really go and buy such a big companies. Then they bought CA Technology in 2019 for $19 billion, and then they bought security business of Symantec. So you kind of see this pattern where Broadcom is buying big enterprise companies, which are other companies are buying from, which will make Broadcom a lot of money, selling all of the parts they don't need and integrating everything into kind of one offer and one solution. If this all seems a bit familiar to you, for those of you who got into investing about 20-25 years ago, this is pretty much how Cisco used to operate in late 90s and beginning of 2000s. They would go buy a bunch of companies, send a special team, special task force to go to these companies and convince people not to quit and to integrate these companies into the bigger Cisco company. By the way, one more trend which we are seeing right now about kind of modern huge companies is that they are not only hardware companies or not really software companies. Think about, for example, Microsoft with all of their offerings of both hardware and software. Even AWS is kind of taking care of all of your hardware needs and offering you all the public cloud offerings with their software. We have talked about NVIDIA, which, yes, they are selling GPUs, but you can go and see all the software which they have pre-built, which are allowing the company to have its sticky business. Broadcom is the same. They have the hardware part of semiconductor business and they have a lot of software offerings on top of that. Now let's take a look at Broadcom's financial for the first couple of quarters. Broadcom reported strong second quarter. Its revenue got to $12.5 billion, which is 43% more than the quarter a year ago. What was interesting is the AI part of the company, which revenue is soared 280% to $3.1 billion, and now the AI part of the company is between 20 and 25% of all of its revenue. The acquisition of VMware allowed Broadcom to close more deals for this year. So for example, if in Q1 the book value of the deals was $1.2 billion, in Q2 it was already 1.9, and Broadcom are expecting that the deals which the VMware portion of the company will bring will equal about $4 billion for a year. In general, the yearly revenue for Broadcom is expected to be about $51 billion, and over $11 billion will come from the AI part of the company. And also the company said that they are expecting their semiconductor business to be much better in H2 because it was kind of lagging and dragging the revenue down in H1. In general, whether you should invest in Broadcom or not is kind of depends on how you are looking at this whole situation with AI and with data centers. If you all in on AI and thinking AI is going to be the next revolution like the internet was, for example, maybe Broadcom is not bullish enough for you. Because again, the AI part of the revenue is about 20-25% of the company. So maybe if you're thinking that AI is going to change the world right now, maybe go and see one of our videos of NVIDIA. Or we just made a video of top 5 AI stocks to take a look at, so you can go and take a look at that video. If you're looking for a more balanced approach, you kind of like the AI, but you're not really sure that the money will be kept poured in there, take a look at the Broadcom. They are seeming like a good balance between the enterprise software and hardware offerings for big corporations and kind of investment in AI. That's all for now. Thank you very much for your time. If you like this video, press the like button and subscribe to our channel, and we will see you in the next video. Take care.